Hello and welcome to Khaleej Times. You're listening to yet another episode of our podcast series on financial planning. And this episode is all about different asset classes and how can we trade in them. But before we start on with our discussion, just a quick reminder that this podcast series is powered by IG. It's a platform where you can trade in over 16,000 financial markets and products. All right, so I'm joined by Mr. Tobias Young, who is the Head of Product Development and Strategy at DGCX. Welcome to the show, Tobias, and it's a pleasure to have you yet again. So before we start our discussion on asset classes, I quickly want to ask you, since you're working with DGCX, if you want to tell us a little bit about the organization, what you guys do.
Sure. The DGCX is short for the Dubai Gold and Commodities Exchange. We were formed in 2005. As the name suggests, our first product was gold. We list 4 separate asset classes: equities, metals, currencies, and hydrocarbons. Obviously, we're going to be talking more about asset classes later. We're regulated by ESCA, who are the Securities and Commodities Authority of the UAE. As the name would suggest, they regulate everything to do with securities and commodities in the UAE on the mainland. We're also backed by our own clearinghouse. They clear all the trades on exchange. That's the DGCX. They are also regulated by ESCA, and as part of the group have equivalents with the DFSA and the FSRA as well.
Now, with that, let's quickly get on to our discussion, and let's start with the basic, right?
Sure.
So first, my question to you is, of course, define asset classes to us.
Okay, so an asset class is essentially a category that you'd put a product into. So if I give you an example, gold. Gold is a metal. Metal, or metals, there are a number of metals. So you'd put them together and you'd class that as, or you'd call that an asset class. So I think it's very distinct. Now, assets or products can be put into a number of asset classes. So for example, I just gave the example with gold going into a metals asset class, but it could also go into a precious metals asset class. And all that is basically narrowing down what can go in there. So for example, in precious metals, you can have gold, silver, platinum, palladium, amongst others, but you wouldn't have copper, aluminium, and zinc because they'd be classed as base metals, which in turn would be another asset class.
If I ask you what are the different types of asset classes, I think this discussion probably can just go on and on and on because there's so many of them.
Yeah, absolutely, 100%. So it's not just singular asset classes, there's multiple asset classes. So I mentioned a couple there with metals. Let's take an example from the DGCX, hydrocarbons. Hydrocarbons, as we call it, was because we formerly listed a plastics contract, right? But we also have oil contracts as well, which would fall under the same umbrella. Separately, oil contracts would also fall under energy or an energy asset class. Similarly, the plastics asset class could be made up of polypropylene, polyethylene, and a number of other plastics. But together they could fit under hydrocarbons, and in turn, they would fit under a commodities asset class. So asset classes are almost not infinite, but they're divisible, and they can be broken down or built up depending on what you're looking to do with them and how you're trying to identify them.
So do you think that it is extremely difficult for an investor, especially someone is starting out, to really start investing into these asset classes? Because like you said, there's so many of them, it's so difficult. So how do you think one can decide on where to sort of start? Or probably I won't say which is the best, but sure. I would say that, how to decide as to, to go about deciding that, I should be starting with this asset class and invest here.
Sure. I would almost say, does one decide what asset class they should trade, or does the asset class decide for them? And I tell you why. If you look at it, I'm from the UK, I'm British. So growing up, I knew all about UK equities. The FTSE 100 was what I would read about in the newspaper. So long time ago, when I was actively investing, I would look to actively invest in the FTSE 100 companies. I was comfortable trading FX, but the FX I would look at was what we call cable or USD against pound sterling. But that's because I'm British. Someone in Chile, for example, might be comfortable trading copper because that's where a lot of the world's copper comes from. This region, people often talk about oil and investing in oil, or the other thing that's very popular here is gold, right? So it depends on, I guess, where you've brought up, what you've learned, what your experiences are, and what you're going to focus on as well.
Okay, so I want to understand that how can one go about investing? So if I'm an investor, I'm starting out, so what is the first step for me in case, if I want to invest in an asset class? What is the first thing I should be doing?
Well, the first step is research and homework, and I'm sure that's something you hear a lot through the series of podcasts, but you have to understand what you're investing in. You don't wake up in the morning and say, right, I'm going to look to buy carbon emissions futures. What's a carbon emissions future? How does it work? How does it interact with what goes on in the rest of the world? So you need to understand the basics of what you're looking at. And as I said before, dependent on where you've been brought up, you might already be partly familiar with some asset classes. So that's probably where you're going to start. Now, in the course of doing your research, say you get to a point where you say, right, I'm ready to invest. Now, how do I invest? Again, it's the same thing. You're going to have to do some research. You're going to have to do your homework. You always need to invest with a regulated firm. You need that protection. Regulations are there to protect everybody. We live in Dubai and somewhat we are sheltered from bad actors. There is people out there that would look to behave in a malicious way to take people's money, and regulations and regulators are there to protect people from doing that. Now, if you go with someone that's unregulated, you run a risk. As soon as someone is regulated, they have to answer to a higher body in terms of the way they act and behave. And for a person that's looking to invest for the first time, that's gone and done their research on the asset class, that's ready to make their first trade, this is very, very important that they pick the right people to trade with.
Absolutely. I mean, I couldn't agree more. And we'll be talking about, the various regulatory bodies who are here in the UAE to protect or safeguard the investors' money. But let's just quickly talk a little bit more about the asset classes. I want to know, of course, there's so many of them, but what are the pros and cons, if you can, talk about, say, the main asset classes, or the more prominent ones which are here in the region?
Yeah, I think it's very much subjective. I think it depends on an individual. There's pros and cons from doing everything. Getting up on the left side of the bed or the right side of the bed. What's the pro and what's the con? Well, on one side you might have a wall, so that's a big con. On the other side you don't, so that's a pro. But it's subjective for people. It really is. Let me kind of flip it another way for you in terms of, tell me, what did you have for lunch today?
Okay, I had some chicken and rice.
Right, okay, perfect. Rice. Okay, you have an affinity with rice, you like to eat it, you can see there's demand for it. So, can you trade rice? The answer is yes. Yes, you can.
Yes.
You can pretty much trade everything that exists out there in one form or another. So, you decide, right, I want to invest in rice. How do I do that? Well, you can invest in the equities of companies that grow, produce, transport rice. You do that. You could invest in an ETF, an exchange-traded fund, an exchange-traded note, or you could go out and buy large amounts of rice and keep it in storage. Now, I don't think you're going to be wanting to buy tons of rice and keep them, but
I think I would probably pass the last one.
Yeah, there is mechanisms to do that. If that's what someone wants to do, there is a mechanism in place for them to do that. And likewise, additionally, they could also trade in futures as well.
Okay, all right. So would you say that, one form of trading, like, for example, investing in futures and options versus another, like putting the money in ETFs? We know that, one is a little high risk driven and the other one is a low risk.
It depends on a person's risk profile, and it depends on their understanding. So if you're trading in an ETF, you tend to be fully funded, which means you know how much money's at stake. If you invest in futures, there's something called leverage or margin, which means you can trade a multiple of your capital. That will mean that you will potentially make a multiple of your capital, but on the flip side,
Well, you have to put in that kind of money.
you might lose a multiple of that capital. So I would say futures are probably for more experienced investors, but it depends on everybody's perspective. Again, it's subjective. Research, homework, regulation to find the right thing that's right for people. And I would definitely say that people looking to invest in an asset class for the first time, trade small, don't trade beyond your means. Because if you trade beyond your means, you're not going to be trading for very long.
So I want to know, since you're saying that it's very subjective, the pros and cons, right? I mean, you have to do your research, you have to understand what is your risk appetite. What kind of asset class are you familiar with, where you're born and brought up, and so on and so forth. How can I take advantage of these pros and cons? Or once I decide on a certain asset class to my benefit?
Yeah, I mean, again, it depends on your understanding of that asset class. So let's come back to rice. Rice, which falls under an agricultural asset class or a soft asset class. You've eaten so much rice in the last 6 weeks, you know what? You've had enough of eating rice, but you were going to go and trade some rice, and you're like, hang on, I now know there's going to be less demand for rice because I'm not eating it. I wonder how many other people feel the same way as me. Maybe now isn't the right time for me to invest. Maybe I take a step back and I look what's going to happen going forward. Another aspect of that will be the time horizons, right? Is it a day? Is it a week, a month, a year, a decade, 25 years, a pension plan? The chances are, if you're investing for the longer term, overall, history has shown us that commodities and equities, they move higher, right? Yeah. History is no guide to the future, just so we can caveat everything there. But invariably, if you invested in stocks 20 years, they are higher today than they were back then. Absolutely. Right? So the profile of someone looking to invest for 10, 20, 25 years or a pension plan is going to be different from someone that's looking to invest for tomorrow or the day after or next week.
Yeah. Okay. Again, very subjective, because there's so many asset classes. So if I have to ask you, which asset class do you think would work best for me? But then again, can you explain it with an example? Like, for example, can you just put some categories out there and explain it?
Sure. So let's look at some asset classes. We'll start with equities because that's probably the easiest. Right. So equities is an asset class that is basically stocks and shares. So virtually every country has a stock market. Within that stock market, things can be broken down from not just equities, they can be broken down into banks, IT companies, telecommunications, sports companies, media companies. So all of these are asset classes within another asset class. Now, what would someone prefer to trade? Well, someone might sit there and watch a lot of TV. And they might say, okay, I spend a lot of my time spending money and resources on Etisalat products, for example. Well, all my friends are doing the same thing. Well, I think it would be good to, this is an example, this isn't a personal thing, I think it would be good to invest in Etisalat. So maybe they would decide to do some more research on the company, look at the financials behind the company, look at what's happened historically, look at the news that's come out recently to see actually if that is something they do want to invest in. And likewise, they can, as I said with your rice example earlier, I've spent so much time on it. Actually, I've looked at it and although it looks good, there's things that I don't like. So maybe I'll invest if the value's there. So if the price drops back, maybe I've got an opportunity to buy. It's all very, very, very subjective. It's all about personal opinion, personal understanding, and personal research too.
Okay. And what is of course, that is the nature of trade. You lose some, you make some, right? Mm-hmm. I mean, it's not possible that you don't, even the best traders in the world will lose money, right? But just if I have to ask you for the sake of asking that, is there a success mantra? I mean, is there something that can possibly make sure that, okay, my investment is secure and I don't end up losing money?
You're going to
especially when you're investing in an asset.
You're definitely going to hate me because it's subjective. Different people that invest will have different theories that they use, right? It's the same as anything. Some people wouldn't buy an apartment on the 13th floor.
Yeah.
In some countries, well, not only too high, but 13's unlucky for some. Some people won't get in a lift with the button 13 on there. There's all these strange things that people have. So for trading mantras, different people think different things. They might think if they have a certain meal the night before, they've got more luck in trading, or their judgment's better the next day. It's different for everyone, and we can all look at the internet and we can probably find 150 different mantras and different ideas. Nothing's to say any of them are particularly right or wrong for any individual, but it's up to an individual to look at what they're investing in, understand it, do their research, and potentially build their own mantra. So there's a number of different ways of valuing companies to invest in. One of the most generic ones is something called a price-earnings ratio. And you can look at a company's historic price-earnings ratio and you can watch it go up and down. And it is literally the price of the share against their earnings. Okay? So the number of shares out there against their earnings. So people look at that and you can see it go up and down. And something that might historically trade at a value of 10 might be trading at 15. Someone might look at that and go, I don't think that's a good investment. Someone else might look at that and go, hang on, I think that's going to go up further. There's room for more growth here. So it's completely subjective. And again, as I say, it's about finding the right thing that's right for the individual investor.
Yeah, okay, so as you're saying that, it's very subjective. You need to do your research. You need to figure out what works best for you. So you're saying that are there any risk management techniques that you can employ when trading in asset classes that mostly works?
I mean, nothing's guaranteed. Prices can go up and down. Yeah. There's times when you sit there as an investor and people have said to me, prices can go down as well as plummet, and that's obviously in times of extreme stress. But I don't think there's any way that you can mitigate your risk other than doing your research and ensuring that you're trading in the right place and on the right platforms, regulated people, regulated funds. So your money's secure from a criminal perspective, but you're still obviously face the underlying risk of the market. Now, again, as I said before, the longer term you invest for, the more secure your investment often is. A lot of people will look at things like mutual funds that will spread money over a particular asset class. Mining, telecoms, banks. Therefore, if 9 out of 10 banks do well, that fund still does well. If you invest in one stock, there's always the possibility that they could be adversely affected in a downturn, and therefore the value of the money that you invested will go down.
And of course, asset classes as well. It's very important to that.
Sure, absolutely. And as I said, there's hundreds, if not thousands of asset classes, and we could talk about diversity to the nth degree. So the equities example, you could look to trade in every single part of an equity exchange. You could look to trade the index itself. But then you'd say, what about gold? What about commodities? And you say, okay, I bought some energy stocks. What about my rice? What about my cattle? What about my lumber? All of these products are tradable and all of them will fall in a different asset class. So again, it depends on people's view, whether it's asset specific, whether it's a split asset class, or in fact, whether it's a whole index of assets that they want exposure to.
So what are the regulatory bodies here in the region, to make sure that people...
Sure. So within the UAE, there's a number of them. I mentioned ESCA earlier, Securities and Commodities Authority, who are the regulator for securities and commodities. You've got DFSA, the Dubai Financial Services Authority, and the DIFC. In ADGM, the Abu Dhabi Global Markets, you've got FSRA, the Financial Services Regulatory Authority. You also have the Central Bank, who regulate currencies. And there's a number of other regulators out there that will cover things such as insurance. But something else to remember is that if you feel like you've been stolen from in some way, there's also the police as well, and they would help being able to guide you to who you would need to speak to. And I would sincerely hope that people aren't affected that way, but unfortunately, not everyone in this world is good. So there is likely to be people that have been adversely affected, unfortunately.
Okay, so Dubai Police, one of the most promising regulatory bodies to go to. I mean, we're all fans of Dubai Police, right? Very proactive, yeah.
They regulate our lives on the streets, but that doesn't mean they're a regulator and they're necessarily going to go through your financial transactions. But they will help. They will be able to help guide you, and they'll say, no, actually, you've given someone some money to invest in something, they've run off with it, you need to go to this person. At the same time, there could also be the criminal aspect to it. So if there's a criminal aspect, then the police would be involved with that.
Okay, Toby, so since we've spoken about so many asset classes, so you mentioned that there's so many of them out there, how easy is it for an asset class to emerge?
It's very difficult. We can look at what's happened recently with cryptocurrencies and digital assets. That's almost come from nowhere. But for every other asset class, they've existed for hundreds, if not thousands of years. So we mentioned gold. Gold and gold trading is old as the earth itself almost. Oil, we could talk about, that's been traded for sort of 100, 150 years. Stock markets have existed. I think the Amsterdam stock market is around 420 years old. Yeah. Yeah, oh yeah. So these asset classes and different types of assets have existed for longer than you and I have, and for as long as anyone can. Let's not forget rice and of course tea. But there is so many different asset classes and things have been traded for so long. So one of the funny things with Amsterdam, so I mentioned the Amsterdam stock exchanges. There's a famous crash of roughly 1760s, which is the tulip mania, as it was called.
Oh, really?
Yeah.
Can you just tell us a little bit about
So tulips were seen as the next big thing. Everybody was trying to buy tulips. The price of tulips went up. And after a while, everyone realized, well, you can just grow more tulips. And so the price collapsed. But people lost phenomenal amounts of money in that, the tulip mania. And then you subsequently had, I think it was the railways in the US as well. And these things happen, and to an extent what we've seen recently with some of the digital assets is they've emerged from nowhere. Everybody's wanted to invest in them. And now people are kind of taking a step back, and rightfully so, because there was no regulation, there's no overriding regulation that supports the trading of this asset class. You look at equities, I mentioned the Amsterdam Stock Exchange being 420 years old. Some of these cryptocurrencies aren't even 420 days old, and people are investing their money. So one of the good things about the UAE is that for cryptocurrencies, they are working towards reaching or writing overreaching regulations that will protect people, which will cover people. We've already seen them start to emerge in ADGM, and we know that ESCA are on their way to publishing their guidelines as well. So that, I think, is a good example of a new asset class. But virtually anything else I can think of has been traded for years, whether it's traded as an actual asset class or a physical underlying. So people have been trading rice for hundreds of years.
Absolutely.
Tea.
So how do you see the evolution of asset classes from then to now?
Yeah, let's go back to the beginning, right? So the word salary, where does that come from? Everyone's now thinking, I've lost the plot talking about salary when we're talking about asset class. But salary came from the word salt. Salts, okay. Right? So people were paid in salts.
Yes.
And people have been paid in seashells, and people have been paid in rocks. Technically, back then, those were asset classes, right? Because people would accept them as a form of currency, as a form of payment, because they had a value to them. And over time, obviously, we've seen precious metals, we've seen gemstones, all get added into this mix, some of which have held their value better than others. For example, we don't put much value on salt now, but we do on gold.
But since we're talking about asset classes, and at DGCX you've got 4 asset classes.
Yep.
Thanks for that. Can you tell us a little bit about it?
Yeah, sure. So as I mentioned earlier, we've got 4 asset classes, which you helpfully just reminded me. Currencies, metals, equities, and hydrocarbons.
You say that these 4 asset classes are probably the most popular, prominent, most traded in. asset classes. So
Yes, they probably are, and they definitely are for us because there are 4 asset classes. But the sort of things that exist in those asset classes. So our largest product, which is Indian rupee futures, we're the largest global liquidity pool for Indian rupee futures trading. We were the first ones to come up to innovate, to invent the contract specification that we now list, and others have copied us or listed very similar products. We also have US dollar trading against Chinese yuan, pound sterling, Canadian dollar, Aussie dollar, Japanese yen, Swiss franc. It goes on.
Yeah, that's the currency.
Yeah, that goes on for the currencies. When you look at the metals, almost there's 2 asset classes within one. So you have the base metals, which is copper, zinc, and aluminium. And on the precious side, we have a number of iterations of gold, for which we have a Sharia-compliant gold contract as well, physically delivered here in the UAE. We have silver contracts too. Now, onto equities, we have Indian and US single stock futures. And in hydrocarbons, as I mentioned earlier, we have that almost complicated name. What we have at the moment as listed products is energy products. Brent and WTI, 2 of the 4 most traded products in the world. In fact, the world trades 500 times its daily production of those products.
Before I wrap up the show, is there anything that you would want to say to our audiences, just from the perspective of investing in these asset classes? And of course, research, start with something that you're familiar with, but anything besides that?
Sure. I mean, obviously you've done research, so I have to say homework, which is exactly the same. Ensure that when you invest, you're investing with a regulated platform, you're dealing with regulated entities, regulated people, and that you protect yourself at all times. Obviously, the value investments can go down as well as up. Understand what you're investing in, understand your time horizons and what your risk profile is. And at all times, obviously, speak to people. Everybody's trading, whether they know it or not. Sometimes a decision not to trade is just as risky as a decision to trade.
Well, on that note and that piece of great advice, it's a wrap from us on this show. Thank you so much for watching. And of course, you can log on to KhaleejTimes.com, where we have lined up 10 episodes on financial planning. So you can go on there and you can, pick up a topic of your choice. We have categorized them, and you can listen up and start your journey on becoming to be a smart investor. And just to remind you that our podcast series is powered by IG. It's a platform where you can trade in over 16,000 financial markets and products. And thank you so much for watching. Again, keep tuning into KhaleejTimes.com for our upcoming podcast on financial planning. Thank you so much, Toby, for being on the show with us. Thank you. Thank you.